Okay, folks, welcome to the Members Inner Circle. Norris, I saw your note and I began working on the chart of the XLE. So we'll talk about that for you. And I'm just about done annotating it now. And I also want to bring up oil because the two go hand in hand. So Norris's question, I'm going to read it off here for those not able to see the chat box. Hello, Bob. Doubled down on XLE last Monday at 59.89 to help get above water with an old purchase. Need a huge 6 points to clear loss, good or bad? Okay, we'll answer that question. Hey, Richard. Hey, Patrick. Good to see you guys. Okay, so let's talk oil first, and then we'll go to the XLE. All right. So the price of oil underwhelmed today, but it was up, flat on the day. Flat on the day. Stokes a little bit concerning, but it appears as though the path of least resistance is up, and it's not even really fair to use a daily chart. Let's go to a weekly chart. Okay. So the weekly chart, we're down on the week. We have resistance above. Do I have an annotated version here? That's better. So I think that, yes, you can get up to your price point on XLE, which is, Norris, about $66 per share to bring you even, give or take a few cents. Is that fair? So oil is a bit weak, and that's what's putting a little bit of a lid on energy. Yeah, it will. It looks like they're heating up over there, no doubt about it. Okay. I think they just bombed one of our air bases over in Iraq. All right, so what I want to do here is I want to bring up correlation of oil and you can see the correlation is undeniable. 87% of the times oil and the XLE trade in tandem. So it's all but a foregone conclusion that you need the price of oil to move up higher. I think that ultimately it will move up higher. Now, your next resistance level is at 61.66. And immediately, not immediately thereafter, you have another resistance level. If you folks are hearing a dog bark, I'm babysitting a dog, and I have two other dogs, and they're going nuts. And something just fell up there. I don't even want to take a look. All right. So, yeah, resistance at 60, let's call it $64 per share, because you have a mix of resistance levels in that neighborhood. $64 per share. So I think that you're going to be able to make it up to 66, which is really serious resistance. I mean, I threw up all these arrows here for a reason, to illustrate how critical of a resistance level that is. I mean, let's update this. resistance in 2016, resistance a couple of times in 17, support, but resistance then support in 18, resistance February 18, support later in 18, a lot of history at this level. So you have two areas between where we closed today and resistance. First stop at around 61.66 per share. After that, $64 per share. If we get a blow up in the Middle East, pardon the pun, you're going to see us get there pretty darn quickly. But absent that, it's going to take some time, Norris. Maybe get some backing and filling. And the fact that oil is kind of lagging here is a bit of a concern. One optimistic thing is that you have XLE up on the week while oil is down on the week. So that's kind of bullish. That's a tell. So you have a little bit of wind at the back of the explorers here, the energy sector. Obviously, volume is very, very light. Next week is going to be a real tell. Do we see that volume return to the energy sector? Otherwise, the Stokes, higher lows, higher highs, perfect. You know, just because they're going above 80 doesn't mean anything to me. That's a sign of strength. We've broken out an RSI, pullback, retest, breakout, everything that you want to see. So the stars are in alignment here. But just keep in mind, you do have resistance at these two levels. And then 66 is within the realm of possibility. Monthly chart. On a monthly basis, we're correlated 90% of the times. Stokes are beautiful. Higher low, W formation. You have the 50 period and the declining 20 period moving average, which is going to act as a ceiling on the shares for a while. Ultimately, it'll work its way through, backing and filling. It'll get through there. So it's going to take some time, Norris. You know, apparently you have the patience, so I'm sure you'll do fine with it longer term. That's 1,000 shares in total, including the ones that you put on. Okay. Patrick, that question regarding Iran? Yeah, that was something that I just pulled up earlier. Rocket attacks shuts down Baghdad after joint U.S.-Iraqi base. So it looks like there were a couple of attacks over there. And this is a direct... There was something about Iran here. Here. This is what's heating up. The Iranians are being backed by the Russians and by the Chinese. So they have a pair of brass knockers on them right now. So they're behaving very, very aggressively through their proxies. And most of those proxies over in Iraq, Hezbollah, and they're declaring war on us. Much as what they did when we first invaded Iraq. Yeah, no doubt. It's definitely supporting gold. No doubt. Geopolitical risk. You could have the dollar rise and gold rise at the same time. So yeah, no doubt. Very good point. Let's see what else is out there. Yeah, not much else going on. Just a lot of fear and greed index at 96. This is interesting. S&P price to sales. We're at about the highest since the dot-com crisis. What other charts do we have here? EBITDA, S&P, earnings before interest, taxes, depreciation, and amortization. Wow, they aren't kidding. We're really extended here. NASDAQ. They're trying to illustrate here that the NASDAQ hit. It didn't hit the highs of the dot-com. Actually, that's not the dot-com. That's back in 2018. It didn't hit those highs. But yeah, it became overbought. I'm really not all too concerned about this. This is serious. Here is in green, you have S&P 500 price, last price, and in red, U.S. corporate profits, recessionary, flatlined. This is not going to end well. And here's the reason why. Global liquidity, all the central banks juicing up the stock markets. Look no further. Crazy times we live in. Stock market, Fed corruption, debt. Yeah. Ben Garrison, he's great. You want me to post which article you want me to post, Patrick? A article or a chart? Yeah, I could do that. With the, I see your last note. Yeah, I can. Let me get it over to you. I pulled up two. I'll send you over both. There's one. There's two. Richard, Boeing. The thrust on the engines are much stronger than the fuselage can take. Most likely that will have to scrap. Whoa. Really? Wow. What would that do to them? I mean, that's their main carrier, no? If they had to scrap that plane? Patrick, did you get those links? They should be in the chat box. Norris, you feel strong like hedging NUGT with dust, even though you close the position? No, I don't feel strong about it, Norris. The logic of as to why I entered that trade is no longer. Let's bring it up. Dust is simply a proxy. I need to do this. I need to bring you back and let you know what's in my head when I'm looking at these charts. And I brought up this chart in the past, but it's worthwhile having the conversation again. Let's clean this up. Get rid of the dollar. All right, so what I did was I took out my piece of scrap paper here on the back of an envelope, and I wrote down a series of numbers. And the numbers represent each time, I had to use two envelopes, each time we hit the third standard deviation Bollinger Band and pulled back. And I measured out the average number of bars on a daily chart, so each bar being a day, obviously. And I also measured out the percentage from the point at which we hit the third standard deviation to pulling back. And on average, the average pullback was about 9 bars after hitting the third standard deviation Bollinger Band. This goes back to late 2015, early 2016 and forward. The average percentage pullback was around 20%. So fast forward, this is a chart going back to the rallies in 2016. And here, we had a pullback here. We hit the third standard deviation Bollinger Band, pulled back. The pullback there was 28.03%. Pull back here. And you can see it. I know you can't. On the chart to the left, it says 27.01%. So these are sizable pullbacks. Usman, how you doing? Of course, yes. Will do. You didn't get the links to the news? Strange. I'll email them over to you, Patrick, okay? Unless, do I have another way? Good, Usman. How you doing, pal? Happy New Year to you. Welcome. I'll email them over to you, Patrick. You can't see the chat box, like the comments that are coming through? Because I did put links in there. Okay, I'll send them over to you. I'll send you the links. All right, so back to Norris's question. You know, I appreciate the analysis that I have here, but I am worried about the fact of being short on an ETF that has a lot going for it at this point in time. So I saw an opportunity to short it. I took it, scalped it, and moved on. I don't necessarily want to bet that my analysis from the past is going to hold true to present day. It probably will. I'm pretty confident about it, not confident enough to go shorting it and being that hedged. So we did sell puts today at the 33 strike. We brought in a little bit of premium. I'm hoping we get that pullback. I hope those shares are assigned to me tomorrow or Monday. Let's go to the intraday chart. The 2-hour closing chart looks really good here. But look at these topping tails here. You know, generally, you're normally not going to see a straight shot higher with this amount of resistance above. So that's a concern. Even when you take a look at it on a 4-hour basis, that's 30 minute, screwed up there. We rallied off the lows, but still, this is ominous to me. But it's not bearish enough for me to say, okay, let's go buying dust back again. I just don't want to do it. What else do we have? So I want to make sure I address Norris's question. You still feel like hedging NUGT with dust? I'll sort of answer that question directly. No. I'm satisfied at current, with having a covered call position. We may, depending upon the markets, roll that out into next week. He's shorted using DUSD. Not that it makes a difference. He's shorted using DUSD or he's shorted Nugget. Good for him. So I would be satisfied right now, Norris, with just using covered calls to hedge, because I think that the path of least resistance ultimately is going to be to the upside, just as it was in 2016 when the shares just ripped through the ceiling. I don't want to wake up and have my face ripped off being short of the shares. Let's bring up Second Sight. Wrong chart list. see what we got. We'll begin with the weekly chart. Not much happening here. Daily chart. Ugh. This is a stock that needs a catalyst of some sort. You know, I wouldn't go buying any more here, Usman. And what I would do is this. If you're looking for an, if you're long, if you're looking for an an exit strategy or an entry strategy, I would do this. Set stops on a close below this lower band of support. Add more on a close above 76 cents per share. Until that time, I wouldn't do anything with the shares. There's nothing to do here but watch and wait. It's a speculative play. And very thinly traded. How many shares did it trade today? 103,000 shares. Let's go take a look at a monthly chart out of curiosity. Yeah, we're just in one big consolidation here. Ultimate Oscillator still looks good. I think the ultimate outcome with this company is that it's going to be a buyout candidate. So I wouldn't go adding more. I would defer back to that 4-hour chart. And if you're looking for a stop point, stop out on a break below, let's call it 71 cents. Where do we close? 74 cents. Add on a rally up and through 76 cents. What else do we have? Just don't write calls against all. Yeah, a good point. Yep, time is money. That covered call cash machine is a nice little thing. Sounds good, Usman. Good. Richard, looking to buy some IWM puts tomorrow. I don't know about that yet, Richard. The market it's just going up, man. Let's take a look. Let's do a deep dive. You know, if you're buying puts, you know, selling calls is one thing. Selling, meaning writing puts, is another thing. You're welcome, Usman. Anytime. But buying those puts, automatically I'm not sure if you're familiar with the Greeks, but theta, that time decay, it could either be your friend or it could be your enemy. And when you're selling covered calls, when you're writing puts, I mean, theta is your friend. But when you're buying puts, it's your enemy. And when I have a clock ticking on a trade, you know, I have to ask myself, what's my edge when I'm buying an option? Is it the fact that it's at an extreme overbought level and I'm expecting a pullback like with Apple? Apple, I could see putting on a put spread, a bear put spread, selling an out of the money put contract, helping that finance your purchase of a put contract that's nearer the money. But with IWM, You know, the markets are still heading higher here. The banks are breaking out. You have a lot of little banks in the small cap arena. Here's the 4-hour chart of the IWM. I wouldn't do it, Richard. I wouldn't do it. Okay, Randy. Manoj, how you doing, brother? You bet, Richard. You know, we'll revisit it. You know, there's going to come a time, but you, everything is completely irrational right now. It's just I just showed you the valuations of these companies, right? Not the companies, of the indices, and you know I've lived through enough of these blow off tops to realize this can go a lot higher, and you just don't want to go buying put options in an environment like this. I just worry about it. That's all. At least with if you're buying ETFs, short ETFs, at least you can stop out of them easy. They're liquid options. Well, the IWM options are liquid. I think that they're going to probably break this out. But next week it's going to be interesting to see the volume. If they continue it higher, then I would become interested to the short side. What am I doing here? To the short side. Perhaps if we saw RSI like 80 on IWM, then I would be interested to the short side using puts. Not right now. Tyson. I haven't looked at this one in a long time. Let's go high level. I don't think so, Patrick. Maybe. You're going to be up? If you're up, I'll do it. I'll come on briefly. Usually on Fridays I take a break, but if you're going to be on, I'll get up and do it. I'll be up anyway. All right, Tyson. You're in an ascending wedge formation here with an ever-tightening apex on a monthly basis. Just be careful of we're putting in some lower highs. We're consolidating. Not much going on here. And here's where I get concerned. I'm going to remove this one. I'm going to redraw it. All right, so at current, on a weekly basis, you're down below a lower band of support. RSI is putting in lower highs, but nothing dramatic, really. We're flirting with a rollover here on RSI. Daily chart. Bearish key reversal day today. I would avoid these shares because we broke support on a daily basis. We are potentially flirting with a break of support on a weekly basis, and we have a resistance level immediately above. Now, were you looking to short Tyson, or what's your play here? What were you thinking about doing already long of the shares? And I'll wait for your answer. I'll just keep drilling down here to a 4-hour chart. Richard, you'll be up? All right. You know what? I'll do it. I'll do it. Randy, I'll get to your symbol in a moment. Oh, for the China trade deal? You would have thought that you would have seen a bid under the shares, but you're not getting it. And that's kind of a tell. Tyson has a big pork business, do they? I always thought of Tyson as chicken. I don't know much else about Tyson other than it's chicken. Let's see if we can bring up the commodities here. $20%? Good information. I didn't know that. I'm trying to find the, here it is. We definitely have a breakout here. You know, so there's something called a tell, right? When a stock should do something because the macro picture is favorable. And I know pork prices over in China are in fuego. They're in hyperinflation territory. Soybeans are moving up higher. Pork's moving up higher. Tyson, you would think, would be doing well. But honestly, if you look at this chart, is this really a company that's done poorly due to the China trade war? I mean, we've had a really good 2018. It consolidated at worst in 2019. So I can only deal with the cards that I'm given, you know, the market that we're given. And the market as it's showing us right now with respect to Tyson is that we're seeing some weakness here. So we want to be honest with ourselves and say, okay, the market is not validating the story, right? And the story is Tyson's got 20% of its business in pork. They should be selling a lot more into China. That should help their bottom line. The market should be smart enough to see that, but for whatever reason, there's no rocket fuel. That's not to say that next week there won't be, but at this point in time right now, we're being denied that rocket fuel for whatever reason, and we don't know what it is. But the chart is telling us, beware. We're seeing a little bit of weakness when we should be seeing strength. So we're going to worry rather than deny the fact that we're seeing some weakness here, long story short. So RSI, lower highs and breaking support. Price, lower highs and breaking support. The grand scheme of things, you know, maybe we're just still in a consolidation range and we need an earnings report or what have you to take us out of this. Let's go to a 4-hour chart. Yeah, you're breaking down here as well. So let's go back to when is the time right? I don't like this chart at all. Let's go to a more friendly chart. All right. So I think that the play here would be this. I would want to know, let's get rid of the red resistance level. I would want to know when okay. So if in fact the market turns around, smacks me in the face next week because I was talking bearishly about Tyson Foods and makes a fool out of me next Monday, it just breaks out. Okay? Wouldn't be the first time. So we break out, we close above this upper band of resistance here, the alert gets fired, and that would be a good risk reward entry point. But at current, we're going to play the hand that we're dealt, and we're weakening up here. So if we believe that longer term that Tyson will benefit from a China trade deal, then watch for a pullback. And there's your strategy. Simple as that. Set your alerts, walk away, let it come to you. If we could sit here day in and day out trying to find the best risk reward entry point. You know what? It always comes down to taking out your crayon, drawing the peaks, drawing the troughs, connecting them, and there's your answer. So I'm going to send this over to you. Terrence, good to see you. You're welcome, Manoj. Patrick, did you do Tesla? I got dropped. I did do Tesla. I like Tesla. A little bit extended right now, Patrick. I think that we'll probably get a pullback, and on that pullback and a continuation breakout, that's going to be the time to buy it. Randy, Tyson, bad price action on a good day. Very good point. Richard, interesting. China has not confirmed the signing of a deal on the 15th. Also, we don't have any details. The excuse is that they are translating the document. Is there a deal? All right, so I think that there is no deal. But to save face, the Chinese will say, yeah, we're going to import. I think Manoj is right. I think that pork prices are going to go higher. And you're already seeing in the futures market, they should go higher. The Chinese people, not the Chinese people, the Chinese Communist Party, their biggest fear are the people. And the people are ticked with prices. So they will concede. And maybe they will, maybe they won't say it's a phase one deal, but they will ultimately start buying more pork because they have to feed their people, because power is the only thing that they cherish. So if they fear that they're going to lose power, they will buy pork. It makes sense. So I think that the story should benefit Tyson. I think that people should be able to look past the phase one malarkey that what it is. It's pure hogwash, pardon the pun, and look to see that the Chinese Communist Party has a problem, and that's protein, and they need to get more protein into China. TA, good to see you. Gold futures, they're up again, huh? I wish we would just pull back and get it out of the way. New yearly highs, new decade highs. Actually, no, not new decade highs. Okay. APDN. Let's take a look. What a story here, huh? Randy, do you know the short interest on APDN? If not, I'll figure it out. So there's a multi-day short squeeze potential here. 145 divided by 21,850 equals. You have about a 6.5 day short covering rally potential here. And how I arrived at that is I take the number of shares held short, I divide that by the 3-month average daily volume, and then I arrive at that number, about 6.5 days. So the reason why I wanted to take a look at the short interest was that it looks as though we're getting poised to pop here. You have the Stokes on a monthly basis, which are flatlined. That ruthless downtrend, believe it or not, has ended. We're still trending down. We haven't broken out of the downtrend, but the ruthless sell-off, we've broken out of that descending wedge formation with the lower band being in blue and the upper band being in red. But a 6.5 day short squeeze is probably not enough to break us out above this resistance level here. Let's drill down further. Pure consolidation. I'm not seeing a reason to put money to work here yet anyway. Stokes are beginning to hook up. RSI as well. But again, really nothing that's dramatic on the weekly chart. Let's go to the daily. Here's where things get a little bit interesting. Look at this spike. Wow. All right, so the play here is a very short-term swing trade. God damn it, I can't type tonight. Okay. All right, so I think you're going to break out here. Let's overlay the weekly resistance levels. Here's price target number 1 right up here. In fact, let's do this. This is probably where we're going. First stop, 581. Here's your breakout on RSI. Reading your note now, Andy. Not much, only 3 million float. Yeah, no, you're getting a higher low, no doubt about it. It's on a daily basis, a very short-term basis, it's breaking out. In all probability, you're going to get a breakout here. Let's drill down further. Yeah, look at this. You have higher lows. This is very pretty. Let's get rid of the weekly. Let's go to a daily overlay. Yeah, here you are in a trading channel. You broke out of that trading channel on the 26th, consolidated, did a pullback, a retest. Now we're breaking out on a 4-hour basis. I think we're going up higher here on APDM. So it looks good, but a short-term swing trade. Yeah, I think you're in the ballpark there. Okay, make sure I didn't miss anybody. I'm going to scroll back through the comments. We'll go over Tesla for Patrick. So Tesla, no new monthly high yet, but very close. I think the great entry point here would be when this market weakens up and we do the pullback to this support level. I think I said this the last time as well. At around 387 per share. Weekly chart. Very close to a bullish key reversal week. We'll probably go higher here. The path of least resistance remains to the upside here. And we're probably coming up here to around 459 per share. But here is where I would want to get involved. Richard, have a great night. See you tomorrow. You're welcome, Randy. Okay, folks. Thanks for joining in tonight. Unless there's anybody else with another question, I'm going to call it a night. And I want to make sure I didn't miss anybody. Oh, and Patrick, I'll email you out those articles since you didn't get them. And everybody have a great night. And I will talk to you tomorrow. Be well.